Hello and welcome to this special edition of the Citywire Ratings Radar Show. I'm Richard Lander, your host. As you'll see or hear, many things are different today. For a start, it's just me with the usual crew of Frank, Angus and Nisha taking a short break. And also, this is being recorded in person in the Citywire Studios in London. And on top of all of that, instead of discussing a top-performing fund manager, we're thinking about all things tech with Katelyn Donnelly, who is the managing partner of New York VC firm Avalanche. If you're watching rather than listening to this, you'll see the company's dramatic homepage photo behind us. So welcome, Katelyn, and thank you for joining us. So first of all, why the name Avalanche? What does that say about what you're investing in and what you're looking for?
Yeah, well, thank you so much for having me. I used the name Avalanche in the dramatic picture because I look for trends and particularly intersections where things are unsustainable and where there are these microscopic changes under the surface that will accumulate into a really big outcome. And when an avalanche comes, it's unstoppable and it sweeps the landscape away and leaves a new world in its place. So I look for trends and sightings of avalanches and try and make bets before they happen.
So this is all things metaverse, NFTs, fintech, and so on.
In all that, like there are micro trends or micro avalanches and macro avalanches in all of those sectors.
Okay, so that's the future. We'll come back to that. Let's look at today. And the last few months have seen the growth sector in the public markets take an absolute bath. Great companies, whether they've been around for years, have tanked. Awful companies that shouldn't have been at the valuations they were have also tanked. Is this a bubble bursting like 2000, or is it 2008, or is it neither of those things?
Well, they say that history rhymes but doesn't repeat. And so it does seem like there's some sort of correction going on or reversion to the mean. I'm not sure if the total bubble has popped yet. I mean, you still see companies like Berkshire Hathaway who've performed well, traditional companies. So doesn't maybe in the growth sector for some of the names that were so overextended and overhyped in the COVID era of the last 2 years, they've now kind of reverted back to a traditional multiple, but it doesn't feel like you've had a complete collapse like when the internet bubble burst or when the U.S. real estate market collapsed. But we don't know what the future holds, and so there might be more to come.
Right. So that's what's happening in the public markets. The private markets, it's the VC backed. There was huge amounts of VC money going into companies, unicorns being created by the day, it seemed, a lot of which did go public. How's this spilling over? Because we did have some extraordinary valuations going on there and companies being funded at 100 plus times annual sales.
I'd say that it's still too early to tell. There's definitely I think some investors are taking this moment to pause a bit and reassess. I mean, the last 18 months were so crazy in terms of deal making and money coming into venture. But that being said, there's still a lot of dry capital out there. A lot of asset allocators are allocating more to venture and private markets. So there's money on the sidelines that needs to be deployed. And then fast growing companies that are in big markets continue to be able to command large valuations. So there's a corporate credit card company named Ramp just raised money from Founders Fund at an $8 billion valuation on $100 million of revenue last year. But because they had 8x growth, they were able to justify it to those private investors. So I think in pockets, you'll still see some extraordinary valuations for what investors think to be extraordinary companies. But in a larger part of the sector, people are slowing down a bit.
Right. So this is separating the wheat from the chaff in the sense that you can still get great valuation if your growth rate is strong like Ramp, and you're going to go somewhere and maybe go public one day. But for those other companies where the sort of the veil has been taken off, they're going to struggle to get money at the same valuation, aren't they?
Probably, but it probably just depends on what the technology is. Can they find an investor that's willing to take the leap? Can they create that market dynamic where there are a couple of private investors bidding up the valuation to be able to get better terms? And so there's still probably enough money out there for many companies that are performing well. But if they're stumbling or there are doubts about the business model, then I imagine the valuations will compress.
Right. Okay. So people might get down rounds. We're going to see less IPOs, do you think, from these tech companies in the next few months?
Well, we definitely have seen less IPOs in the last couple of weeks or months. So I would expect that to happen going forward as well. The other thing to note is that the IPOs were so manic in the last 12 months that so many companies that could have waited, rushed to IPO while the market was hot. And so there's probably...
Everything's been pulled forward.
Yeah,
a phrase
already
we
pulled
heard
forward.
a lot during IPO. Peloton sales got pulled forward. Everything's got brought quicker than it should have been, and now we're suffering the downdraft of that.
Yeah, and then also the SPACs have shown to be
not great.
Not great. Yeah, your average SPAC doesn't look great.
Yeah,
there's still some that are good, but there were so many that were raised so quickly that are struggling to find acquisition targets, and that was a big route to the public markets for many of these private companies.
You mentioned, there's VC money and there's other money, and a lot of what you might call Citywire's traditional client base, the massive asset managers from BlackRock down, they've started to allocate money to the private sector, VC, running their own VC shops, because they feared returns are going to slow down in the public markets. People looking for income, and frankly, bond income is pretty terrible these days. So these companies are venturing into this territory, and are they getting it right, or are they making the same FOMO mistakes when they went into WeWork and thought, this is great, VCs are in there, so it must be right, and then lost their shirts?
It's tough to say because so many companies are staying private so much longer that you look at the past and you have Microsoft or Amazon were going public at valuations, in the hundreds of millions of dollars. And now you have a company like Stripe that's still private and valued privately at like $150 billion. You're like, that should be in any other era a publicly traded company. So I think they just need to be, probably investing with the right firms and the right companies. And they're in a tough spot because, as you say, there isn't a lot of returns to be found elsewhere, and we'll see how it all shakes out.
Cool. What's the mood like? Were you at South by Southwest last week?
I wasn't.
No, you sat that one out. But you're obviously following it closely. What's the mood like? Is there a feeling that the glory days are over, or are people just partying on?
I think the party rolls on. Some people are, and maybe a part of the culture of technology and venture capital is one of optimism and long-term thinking towards the future. And so I think maybe privately there might be whispers about, macroeconomic concerns around inflation, the pullback in the private or in the public markets with these big SaaS companies. But generally, at places like South by Southwest, like people are still very positive and optimistic, and that's kind of the culture of the industry.
Just we were discussing before we got started about private equity, because and there's been a couple of big deals recently, as there have actually in the asset management industry, where the private equity is just hoovering up RIAs in the States. Is this the get out clause for companies when their share price starts to stumble, that private equity will come in and take them off the public markets?
It does seem like that, doesn't it? I mean, these private equity companies have also so much capital that they have to deploy that they're bidding, and they're finding some probably good deals in the public market. So Pearson, which we were just discussing, their board received, I think, rejected a bid from a private equity company. Anaplan just was taken private by a private equity company. So I think we'll see more of that.
All right. Full disclosure, Katelyn used to work at Pearson.
That's right.
Pearson
Yes.
Ventures, right?
That's right. Yeah.
Yeah, cool. Okay, before setting up her own shop. Let's go back to your own shop for a couple of minutes. Avalanche, the sort of the micro signals that things are about to happen. Where are your investments taking you at the moment? What areas in particular do you think offer the most excitement?
One of the trends that I've been following for a while is one that I call everyone is an entrepreneur. That you have the rise of the freelance economy, you have rise of decentralized autonomous organizations, so people freelancing essentially for different networks of developers, and people are changing jobs at a increasing rate. So I'm looking at businesses and companies that manage freelancers or help freelancers or micro businesses run their own shop, provide those sort of services and wraparound products. That's a big theme for me. Another one, which is the sort of original Avalanche, is the unbundling of the education sector. So particularly in the US, but I think it's true in the UK as well, the university sector's kind of come under scrutiny from students who see prices continuously rise, and the outcomes that they receive from a university education not necessarily translate to a higher income job. And so people are questioning, well, what's the value of a college degree? Is it worth going to university, or should I just get a job at a tech company and start to apprentice and save myself the debt? And so with that trend comes a whole host of businesses related to alternative pathways or credentials. So like coding boot camps or development shops that teach people to be software developers or product designers. There's also several credentialing platforms. So they're like online badges that you can take you can get for completing short courses or showing that you have a competency in a particular skill. And so employers then will be able to say, oh, you have the software engineering badge from GitHub, which shows that you've contributed these repositories. That'll get you a first round interview as a software engineer at our company, for example, right, or in our DAO.
Just, you mentioned the word DAO there, and it's decentralized autonomous organization, right?
Yes, yeah.
Probably doesn't mean much to many of the people listening or watching this. So just tell us very briefly what a DAO is, why it's different from, say, GoFundMe in terms of raising money and helping people.
Well, there's many different types of DAOs. So there's investment DAOs or sort of project or charity-based DAOs, and then there's sort of community organizing or organizing DAOs. So DAOs they stand for decentralized autonomous organizations, and the idea is that you're able to get a group of people who are contributors to be you set there's technology that governs the decision making, and there's different bounties that people can get paid, usually in a currency that's native to the DAO itself.
We're talking some sort of cryptocurrency.
Yes, yeah. But you can usually swap that for like Ethereum, and then you could swap that for US dollars. So it's all tied back to the financial system. But it's more like a technology mediated organization that ideally is much flatter and less hierarchical than a traditional one. Right.
And what stage are we at here? Is it just the rumblings under the mountain, or when's the avalanche going to happen in something like DAOs?
I think DAOs will take maybe several more years at least to go mainstream. What is interesting about DAOs is how passionate the community of people are that are involved in them, and that they are truly technology native. So if you think about the two big trends shaping the future being, technology, like software is eating the world, everything is going to be technology enabled. Well, technologists are really drawn to this way of working. And then the other trend being that Gen Z and Gen Alpha after them are going to be an increasing presence in the workforce and they prefer these sort of working arrangements, it's only a matter of time before they become more of a force to be reckoned with.
Brilliant. We'll have you back on when the Avalanche has happened.
Yes.
And you can tell us all about it then. Katelyn Donnelly of Avalanche, thank you very much for joining us today on the Ratings Radar Show. We'll be back in a couple of weeks, back to the traditional format with my colleagues, and we'll speak to you then.